India has a problem, and this problem is becoming bigger every single year. AI is growing fast, data centers are expanding, EV adoption is rising, factories are scaling up, and across the country, electricity demand keep increasing. But here is the real issue. Generating electricity alone is not enough because electricity useless if a country cannot transmit it efficiently. Now think about this for a second. India wants renewable energy. It wants smart city. It wants artificial intelligence infrastructure, digital connectivity, and nationwide 5G expansion. But all of these ambition depends on one common thing: a massive electrical backbone. We are talking about transmission system, smart grid, substation, and large-scale energy infrastructure. And while most investors are busy chasing flashy power generation companies, one company is quietly trying to build the backbone behind India's next electricity revolution. This is not just focused on transmission anymore. It is also entering smart meter, renewable integration, data center, and digital infrastructure. And slowly the market has noticing it. The company is Techno Electric and Engineering Company Limited. Now, before we go deeper into the business, a quick disclaimer is here. This video is made purely for educational and informational purpose. It is not a buy or sell recommendation at all. The purpose of this video is to simply understand the company, its opportunity, its risk, and future potential. So before making any investment decision, always do your own research or consult a financial advisor. Now with that out of the way, let's understand why the market is suddenly paying so much attention to this company. This is not one of those buy this multi-bagger stock immediately type videos. After going through the annual report, quarterly results, management commentary, and future expansion plan, I found something that deserves much deeper discussion because this company clearly has powerful opportunity ahead, but at the same time, it also carries some hidden risk that many investors are completely ignoring. So in this video, we will break down what the company actually does, why the market is re-rating it, whether the number truly support the hype or not, what management is planning for the future, and most importantly, does this stock still have meaningful upside left or has the market already become too optimistic? And trust me, once you understand the company's data center strategy, you will realize why the Techno Electric is no longer just another EPC player. But before we talk about the company itself, first let's understand the opportunity. So India's electricity demand is expected to grow by nearly 6% every year till 2032. And this growth is not happening randomly. It is being driven by artificial intelligence infrastructure, EV charging stations, manufacturing expansion, data center, Digital India initiative, smart cities, and rising middle class consumption. Now, most people assume that power generation companies will benefit the most from this trend. And yes, that is true. But there is another layer to this story that many investors completely miss because electricity generation is half of the story. Once electricity is generated, it still need to travel safely across the country. And for that, India's need transmission, infrastructure, substation, smart grid, and grid balancing system. Without this backbone, India's power growth story simply cannot work. And that is exactly where the Techno Electric operates, which means indirectly, the company is sitting at the center of multiple long-term mega trends all at the same time. Now, let me simplify what the company actually does. So, imagine India's electricity network as a giant highway system. Electricity is generated somewhere, but it must eventually reach homes, factories, railways, airport, EV charging stations, and data center. And that transportation system needs infrastructure. That infrastructure is built by companies like Techno Electric. Its core business revolve around power transmission and distribution infrastructure, and most of its work happen through EPC projects. That mean engineering, procurement, construction. In simple terms, the company design, builds, and execute electrical infrastructure project. But this is where the story starts changing. Management realized something very important. A traditional EPC business alone cannot create massive long-term valuation expansion. So instead of remaining just another infrastructure contractor, the company started entering future-focused business, and honestly, this is where everything becomes genuinely interesting. Now, let's talk about the company's three major areas that the market is excited about. And the first and probably the biggest is data center. Techno Electric plans to invest nearly $1 billion over the next few years to build around 250 megawatt of hyperscale and edge data center capacity across India. Now understand this carefully. This is not a small side project. This is a serious strategic shift. Its Chennai project alone carries a planned capex of around 1400 crores, and according to management, equipment order has already started, civil work is progressing, and operations could begin next year. Now, why is this such a big deal? So, because India's data center demand is exploding, AI, cloud computing, OTT platform, gaming, fintech, and 5G rollout all require massive digital infrastructure. But here is the most interesting part. Data center also need huge amount of reliable electricity, and Techno Electric already understand power infrastructure deeply. So management is now trying to combine power infrastructure with digital infrastructure, and that is exactly why the market started re-rating the stock, because data center business usually receive premium valuation. The second major growth area is smart meter, and this opportunity is enormous. India is rapidly replacing old electric meter with smart meter, and Techno Electric is aggressively participating in this transaction. The company has already installed more than 1,27,000 smart meter, and execution speed has reached nearly 3,000 meter per day. And it has already won projects worth more than 3,000 crore. Now let's come to the management. So management long-term vision is to install 10 million smart meter, and really this matters a lot because smart meter create recurring opportunities and long-term contracts and strong positioning in digital infrastructure, which is far better than relying only on traditional low-margin EPC works. And the third growth driven is transmission infrastructure itself, which still remains the company's core foundation. India's transmission opportunity is estimated at nearly 3 lakh and 56,000 crore rupees, and Techno Electric already has a strong credibility in this space. Its major clients include PGCIL, Adani Energy Solution, BHEL, IOCL, NHPC, Vedanta, and multiple state electricity boards. Now look at the revenue mix. So PGCIL contribute around 25%, Adani contribute around 14%, Rajasthan Utility contribute around 9%, and remaining 52% come from multiple other clients. That's actually a healthy diversification. But the most important number right now is the order book. Current order book stand around 10,951 crore. Compare that with the FY25 revenue of roughly 2,400 crore, which means the company already has multi-year of revenue visibility logged in. And in infra business, order books are like oxygen. Without a strong order book, future growth visibility become weak. So this is definitely a strong positive sign. Now let's talk about management. Because in infrastructure business, management quality changes everything. And honestly, one thing impressed me immediately, that is financial discipline. The company has zero debt. Seriously, most infrastructure companies depend heavily on borrowing to grow. But Techno Electric has managed expansion while maintaining a complete debt-free balance sheet. And that is rare. Now look at promoter holding. So promoter own nearly 56.92% of the company, and promoter pledge is zero again. And when we talk about institutional, so institutional investors are also participating actively. Domestic investors hold around 22.72%. FIIs hold around, that means foreign institution hold around roughly 8.65%, which means smart investors' money is already tracking this company closely. And management vision is becoming increasingly clear. They no longer want Techno to remain just an EPC contractor. They want to transform it into a future focused energy and digital infrastructure platform. And if execution succeed, this could completely change the scale of business. Now come to the most important part, because stories can sound exciting but numbers reveal the truth. So in FY21, revenue stood at around 883 crore rupees, and by FY25, revenue had reached nearly 2400 crore rupees, that almost 3x in just 4 years. Now look at the profit. So in FY21, profit was around 200 crore, and in FY25, profit increased to roughly 428 crore rupees. That more than double. And interestingly, the biggest acceleration came after FY24, which suggests the company may have entered a much faster growth phase recently. Now let's look at quarterly momentum. So sales in December 24 were around 675 crore rupees, and by December 25 sale has increased to nearly 856 crore. That is strong growth again. Quarterly profit also moved from around 104 crores to 151 crore during the same period. Notice something important here. Profits are growing faster than revenue. That usually signals better margin, strong execution, and operating leverage kicking in. EPS also increased from 8.99 to 13.05, and market absolutely love rising EPS momentum, which explain why the stock has re-rated so aggressively. Now let's talk about the current valuation. The company's market cap is around 15,500 crore, and its P ratio is 30.6. Its PB ratio is stand at 3.82, and ROC, that means return on equity, is 12.8%, and ROC, that is return on capital employed, is 16.6%. Luckily, the stock also pays dividend, and dividend yield is around 0.68%. And honestly, this stock is not cheaper anymore. The market is already pricing in future expectations. That is data center, smart infrastructure, and digital growth. And that changed the entire risk reward equation. every great story also comes with risk, and smart investors study risk carefully. The first risk is valuation. At a PE of 30, that means expectations are already very high, which means future execution pressure is massive. Even one weak quarter can hurt sentiment badly. The second risk is data center execution. This business requires huge capital, operational expertise, and flawless execution. Just because the vision sound exciting does not guarantee success. And the third is business cyclicality. Infra business naturally go through uneven growth cycle. Revenue visibility can fluctuate over time. And the fourth risk is receivables. Auditors have highlighted overdue receivables in their report, and management says these amounts are recoverable. But investors should still monitor cash flow quality very carefully, because in EPC business, cash flow matters far more than accounting profit. So, after studying the business, management financials, future strategy, and risk, what the financial conclusion? So, the Techno Electric is clearly transforming itself. This is no longer just a traditional transmission EPC company. Management is trying to position the business at the intersection of India's electricity growth, smart infrastructure, renewable integration, and digital infrastructure. And honestly, the transformation story does look real. Like zero debt, strong order book, rising earning momentum, smart meter opportunity, data center expansion, institutional participation, these are serious positives. But the market already understands this story. This is no longer a hidden undervalued stock from this point onward. Execution will decide everything. So personally, I think this is one of the most interesting infrastructure transformation stories in India right now. But this is definitely not the kind of stock investors should blindly chase after sharp rally. This is kind of company that deserve close tracking, especially during market correction. Because if management executes successfully, Techno Electric could slowly evolve from a normal EPC company into a major future infrastructure platform. And that could completely change its long-term valuation story. So now tell me in the comment section, do you think Techno Electric can become India's next major infrastructure re-rating story? Or do you think the market has already become too optimistic? And if you enjoyed this deep research breakdown, subscribe to this channel, because in the next video, we might uncover another hidden opportunity before the crowd notice it.